In this video, we're going to be using support and resistance with a specific type of entry model. If you're a newbie, a beginner, or somebody that has been trading for some time, this video may have some nuggets for you to go away and implement into your strategy. And once I've shown you an example, we will then backtest this example and see whether the entire strategy is profitable or not. So we are on this video to test it out on gold. We are on the daily chart, and this is what you, the listener, will be on, and it's solely trading off the daily time frame. So let's mark out areas of support and resistance on the immediate chart in front of us. So of course I have picked this as an example to show you, and then we will backtest this strategy. So what you will notice is that price here has had a reaction. Now the best way to mark out support and resistance zone is just pick a rectangle, have it extended to the right, so when you pinpoint a zone, it will just drag it across and then decide what color that you want it to represent. So now that we have marked out this specific area, we can also mark out this specific area as well. You can see that price has had a reaction around here. We didn't trade back into it, so it's quite good. And all we're doing is waiting for price to come back into this zone, and then I will show you a pinpoint entry model to specifically use, and then what reward to risk to go for. So let's wait for the price to come into that zone. Okay, price has arrived into this specific zone. Now it's only tagged it. I want it to go into it with a candle close, which we have had, and now we're waiting for an entry model. The entry model is very simple. We are placing a sell stop. If we were going higher, we would put a buy stop, but because we want it to go lower in terms of selling into the market, we're going to do a sell stop. So pretty simple. What we're waiting for is a candlestick to close below the low of here, and if it does that, we will enter. So it would be something like this. You can see now stop loss would be above there, and then we would enter. Now this entry criteria, to give you a high win rate, we want to have 2 consecutive candles violating the original one that was taken out. So for example, if you look at this candle here, if this was a zone that we wanted to short in the market, which of course it isn't, then we would wait for 2 candles to violate this one, which touched that zone. So we would have one that went down, and then we would have another one, and then we would enter that trade with a stop loss above the candle that got violated. So let's show you an example. It's super simple, and you can see that price has gone into this zone, and we can see straight away it has been violated, and all we're waiting for is one more candle to take out that one. Now this is something that no one on the internet is sharing, and then we would aim for a 4-to-1 or 3-to-1, 4-to-1. Now you can see that it would look something like this, but our entry criteria is what? We'll wait for 2 consecutive candles to take out this one. So if this is our high, we'll wait for 2 candles to confirm that high. So we would put it here, because we are waiting for the next candle to take this out. And you can see straight away, if we put our stop loss just above that high, and we wait for the price to go below here, and once it goes below there, we would aim for a 4-to-1. Let's see. Either we get tagged in, you can do a sell stop, or you can manually just visually see where the price is, but most likely a sell stop would be the one. And you can see straight away we did not take us out there. So let's cancel this, and we wait for price to take out this low here. Okay, we need 2 candles to do that. Okay, there's our first candle, and wait for one more candle. There you have it. So this would be our entry on that. This was the candle that we have decided that got violated, so we put a stop loss just there, and then we are going to go for a 4-to-1 or 3-to-1. Let's do it like this, and part of the back test we're going to check is which one's more profitable in terms of win rate. Is it the 4-to-1 or the 3-to-1? And let's see what happens. There you go, and let's just play it. Okay, both target has been hit. Okay, let's do another example. We have got price, which is just around here, and you can see very clearly we have got support and resistance zones just around there. So we got price with support, which got broken, then we had a resistance point, and now what we want to just basically see is whether price trades back into here for us to sell it further down, or is it going to break up to the upside. We don't know yet. Let's see what happens. Okay, you can see very clearly price broke above. It didn't meet our entry criteria, so let's get rid of that zone. And let's see if this specific area here that price has reacted, this zone here, whether this is a valid area to sell or not. Remember our entry criteria? We need 2 consecutive candles which violate the candle that we want to place our stop loss above. Okay, if that one didn't do it. So if we consider this one here as where we want to place our stop loss, then that one didn't get violated. Let's see if this one gets violated. Okay, that one got violated, and we need one more candle which takes out this low, and then we will enter. There you have it. Okay, so that's violated it, and what we can do is place a stop loss just above that, and we can either go for a 3-to-1 or a 2-to-1, and let's just see what happens. Either we get stopped out or the trade goes in our direction. In this case, the trade somewhat played out well, almost a 1-to-1, and then of course we got stopped out in that respect, which is all part of the game. Okay, so what now? What happens here? We will look at potentially marking out some new support resistance zones. This specific area, you can see it's already been used, so it's probably unlikely that price will hold the area, so I'm not going to trade into that area. But what would be interesting is potentially seeing how price reacts in this area as a support area, whether it's going to be that area or whether it's going to be somewhat here. You can see there's support there, and we have got somewhat of something just here, which of course broke out. You can see, there you go. So you can see we had resistance there, which turned support, and we got some resistance here that was broken above, and we got support here. So let's wait and see what price does when it reaches those zones. Okay, it's reached that zone, and you can see that price had a reaction off of that candle there. It's taken that out, so we wait for another confirmation, which of course it has 2 candle confirmation, and let's see if this one is a win or not. Okay, so what we're going to do is we're going to enter that trade there, stop loss just there, and we're going to do a 3-to-1 reward to risk. Let's see what happens. Okay, so far, okay, we almost got stopped out. We are almost, yep, looks like it hit TP. They literally swiped TP just there, and happy days. So we hit our 3 to 1 target. You can see, amazing. So that is very simply the example of the support and resistance. Let's do some backtesting on that randomly. Let's take the random bar and let's just do a random selection. This is taking us to February 07, and all we're going to do is whatever is in front of our screen there to there, we're going to mark out the support and resistance areas. So first area zone is here. You can see price did pretty much come into this zone. You can see tap that zone, went, okay, that's the zone. Then you can see price had another area where you can see with a zone there, and then we're gonna do another zone somewhere price had a reaction off of. So you can see that price did have some solid reactions from this point where price of course had multiple rejections before it broke out. And let's put another one here. You see price broke above, and then one more there, which is a resistance point. So we got our zones marked out. Which one do we go for? Do we wait for price to come back into this zone and then go above, or do we wait for this one? This is where our entry model will tell us. Remember, wherever the stop loss is going in terms of the candle that we want to use, it must have 2 consecutive candles higher. So let's see what happens. Okay, price has come into this zone, you can see. Now it's having a reaction. If we want our stop loss to go below this candle here, below this candle as a buy, then we need to see a candle break and a break again. It's broken and I need one more candle. There you go. There's my confirmation that this is where my stop loss is going to go. Okay, there you go. That's my stop loss. And then I'm going to go for, again, I'm going to see if I can get a 3 to 1 on this one. Okay, get stopped out, not an issue. You can see that price is now currently at 1.2. So here's where your risk management can play out. You can, when price reaches a 2 to 1, which is about there, you can move it to break even, and that's up to you how you want to go about doing it. Okay, now that it's actually hit a 2 to 1 reward to risk, you can see, oh, not yet, not quite. Okay, let's see if it hits. Yep, it's 2 to 1 now. You can see I'm going to move my stop loss to break even. There's a risk-free trade, and then let's see what happens. Do we hit the 3 to 1? Okay, yep, we got stopped out. But you can see in terms of risk management point of view, you can either let the trade run or you can let it come back down, and then that wasn't too bad. You can see that we almost hit target there. So let's get rid of that. And now what do we do? Have we already traded this specific zone? Yes, I've traded this zone. I'm no longer interested in that zone. Okay, you can see, and you can see price has already traded into that zone. I am no longer interested in that specific zone. So now price is in between the top and the bottom of that zone. I'll just wait for that price to come down, or price to go high. Okay, so price has gone higher. It has now arrived at this zone here where we had a market rejection before. Where do we want to place a stop loss? We want to use this candle as stop loss. It must have 2 candles consecutively breaking below it to place our stop loss. Okay, then we're going to move it across. Okay, now it's completely broken our zone, but price does have a tendency to break zone and then come back down. Still nothing. First candle has broken that one. We need one more candle. Okay, so we have had one more candle, but the only downside is that this is quite bullish. It's not bearish. So personally, I wouldn't have taken that trade just because of the wick rejection. So we want to make sure that price is breaking below this candle twice, but we want to make sure that the candle itself isn't bullish because it'll just turn the whole thing. So let's say if we did take that trade based off of entry there, stop loss above the candle here, which we want to use, most likely we'll probably get stopped out, or it may play out, but personally myself, I would avoid it. There you go. See, I would completely avoid that, not taking that trade, because that was what would have happened. So we want to be looking for 2 consecutive bearish candles in confluence with the direction that we want to go. So let's get rid of that. Now price is completely, you can see, trending towards the upside, creating new all-time highs. So how do we go about trading this thing? We just have to let the price do its thing. So the last area of interest where price had a good reaction was around here. That was our zone. So let's just wait and see what price does in that zone. And also we got a potential zone here where you can see price had resistance, broke out, support, broke out, and a bit of support there. So this could be our interest. You can see price has tapped that area, and can we get a consecutive candle? Yes, we can. We've got, you can see it's tapped into that zone, and now let's put our stop loss below that area. Okay, put our stop loss below this area. Let's see how it obviously plays out. Stop loss below there, and then we are going to aim for a 3, 2, 1 reverse to risk. So let's see what that gives us. Okay, you can see we hit that zone, tapped it, and because we're creating new all-time high, the likely chance we're going to go higher. Stop loss below the candle, which violated the one that we want to play that stop loss. But because in this case we had a situation where price went lower before going higher, our stop loss area would be changed, because originally we went for this, but the violation or the touchdown was this candle. So ideally we need price consecutive twice, which we didn't get. You can see we didn't get that. Okay, we have had price now violate this one. This is where our stop loss will go, but we need another candle to violate this high, which we did get. So now that we have got that stop loss there, and then we're going to go for a 3, 2, 1. You can see we hit target. Brilliant. So that's a 3, 2, 1. Even if we went for 4, 2, 1, we could have hit target like that. You see? So support and resistance zone is easy to mark out. What's important is your entry model. Wherever you want to place your stop loss after a candle has touched the zone, you want to make sure you have 2 consecutive candles confirming your area that you want to place your stop loss, or the candle that you want to place the stop loss. Hopefully you found this video helpful. This has been an eye-opener for you. This is on gold. I will do further videos, so make sure you give this video a like, and if you're not subscribed, then a sub to the channel would be amazing, and I'll catch you on the next one.